Hello there, Dana here with another trade recap, and this one is XLF, or the financial sector. On your screen, you see XLF on the day aggregation, meaning that each candlestick represents 1 day of price data. During my research last week, I saw that March 21st and March 22nd combined to create a shooting star, which is one of my signals. That shooting star was rejecting a weak ceiling or a weak resistance level. I determined that after I found my signal, the confirmation price would be when XLF broke below $41.39. Why? Because that is the low of the combined shooting star, and that would provide me confirmation that a potential reversal or short-term retracement was in place. Next, I identified my initial target, which would be $40.88. And also, I determined my stop loss. Dana, what do you mean by stop loss? As we know, trading is about probabilities. That means it is highly unlikely that 100% of our trades will be successful. It just likely will not happen. So we want to establish a stop loss that lets us know once the trade goes this far against us, then we are going to cut our losses. Again, trading is about probabilities, and there is no 100% guarantee. So my stop loss is $41.71. Why is that the price? It is 50% of my signal. Again, the shooting star. Dana, why does 50% matter? If you go back and retest, there is a strong probability that price tends to retrace 50% of its initial move. So if probability suggests a 50% retracement, then a 50% stop loss is supported by enough price data and evidence. So let's see how this trade unfolded for me. So we see on March 23rd, we broke below our confirmation. So that piece of our strategy was confirmed. And therefore, I purchased the $41.50 put for $28 per contract. I had an April 5th expiration date on this. Let's see what happened next. Look at that. Price went against us. Not only did price go against our trade, remember we were in a put, or I was in a put, and then price started going to the upside. Not only did it go against me to the upside, it violated my stop loss. And because it violated my stop loss by closing on the wrong side of the stop loss, I sold my contracts to stop my losses. So I bought it $28 and I had to sell at $12 because it violated my stop loss rules. And that was a loss of 57% loss on investment. The sooner that a trader can determine clear stop loss rules, and not just determine the stop loss rules, but stick to them, the more quickly you'll become successful. So the question becomes, Dana, why don't you just hang around and just see what happens? Well, what if I did? If I hung around and to see what happens, you see what happened the next day. This is the day I sold here where my cursor is. The next day price kept going up. So what do you think happened to those contracts? I couldn't even recoup $12 like I did initially when I sold on this day. Because XLF kept going up, that means my put kept losing value. But because I stuck to my stop loss, I was able to recoup at least some of my money. Again, as a trader, you want to live to trade another day, which means you need money in your account. So, in establishing your trade strategy, determine your stop loss, not just the price, but what is your stop loss plan? Adhere to it, exercise discipline so that you will have money and cash to trade another day. I hope this helps. Questions, let me know. We'll chat again soon. Goodbye.